Back to the channel. So I've got another quick one for you all this evening. We're going to compare SPYI to SVOL. And so SPYI was a fan suggestion that just came in the other day. And I'm open to more of these. I know there's like an infinite supply of these dividend ETFs, so I'll keep talking about them until I run out of them and do comparisons and whatnot. And for our favorite ones, we'll keep going back throughout the year, maybe do like a comparison spreadsheet, maybe keep track of them throughout the year. But for now, I'd like to just keep churning these out. I'm close to my 1 year of monetization, trying to actually hit the watch hours I need for to keep the monetization. So I'm close, but got to keep churning them out to get there. So once this phase is over, I'll start getting into other topics again. But this has been a really fun series, longest running series on this channel. So let's go ahead and start with looking at Yahoo Finance, and we'll go over the SPYI first. So the SPYI is the NEO's S&P 500 High Income ETF, which is currently trading at $47.60. And look at this, I have the dividends right up here for you. Historical data, dividends. So we've got about 6 months of dividend history because it's a relatively new fund. Let me just verify that real quick. I think this is the maximum dividends that we have here. So we had 48.5 cents September, plus 46.5 cents October, plus 47 cents November, 46 cents in December, 47 cents in February. So maybe we skipped a month. And then 46 cents in March. So that's 6 months of dividend yield. So what we need to do is multiply this by 2. So this is $5.65 annualized, divide by 12. We're averaging about 47 cents per month. So about 1% in dividends per month. Hence 12% a year. Because if you take 565 divided by 4760, you get 11.87%, which rounds up to 12%. So 12% is pretty solid, but not as solid as our 18% that we're getting in the SVOL. So what I'll do, I'll keep that 565 in the calculator here, because we'll add this to the spreadsheet in just a second, but we'll go ahead and look at SVOL first, just to confirm, just to see how we did today. The market was down today. We had some, I think everybody knows the big news today, but we had a lot of adverse market news overall, including the big news, which affected the market negatively. So SVOL was down a bit today, 21.78. It's up in the after hours to 21.90. Dividend yield is about 18%. And let's see, one live viewer. Okay. So yeah, dividend yield is about 18%. Year-to-date total return, 4.37%. So really, this one's staying about the same, not too much fluctuation. We had peaked out at about 22.90, so we fluctuated about $1 or so. Looks like all the indices are up tomorrow, so we'll see. We'll see how it goes tomorrow. But it looks like right now SVOL is still the favorite of these two, anyway. Definitely not Zim, but the favorite of the two. So with that, let me go to the spreadsheet, and we'll look at adding this one to it, this SPYI. So pull that up real quick. Switch the screen over to that. Let's share that screen. Here we go. Okay, so same deal. You have $1 million. You're either retiring in it or you're going to live on it. SVOL is still going to pay you a whopping $177,000. Or if the dividend got up to that 35 cents, it would be $181,000. So really tough to beat there. But we're going to add SPYI right now. So SPYI. Actually, let me do this. You should know the drill by now. So same format. SPYI. $1 million is going to get you at the current price. What's the current price again? 40 something, right? 45 something. SPYI. 47.60. So this is going to be kind of like the JEPQ. Not terrible, but not the best because it's a high price. So we've got this. The dividend is $5.65. So it's about a 12% dividend yield. That's going to be this divided by 47.60 is 12% to be exact. rounding up a little bit. So the payout on this is going to be 565 times 21,000 shares, or 118,695 per year, or divided by 12, 9,891 per month. So not too shabby. And if you're looking at 10,000, you just shave some zeros off. So you would be, with 10,000, yeah, you're just going to shave off 2 zeros, right? So the 118,000, or you could even take like 100,000. So I mean, with a million, I mean, it's pretty easy. You could just round up to 12 and say 120,000 per year. Or with 100,000, it's 12,000. With 10,000, it's 1,200 per year. So that's a pretty easy example. That's a pretty quick one here. If anybody in the comments has any questions or any other funds they'd like me to cover, the one we did yesterday, the HDIV, is right up above, 10.19% yield. So that one's good, but not as good as this one. Like I said, I figured I would just cover this one really quick because, it was a audience suggestion. So, but yeah, SVOL still takes the cake as far as this one's concerned. Let's look at, while I'm at it here, let's look at the UPRO, triple levered ETF for the S&P 500. So the UPRO is at 38.34. I'm looking at more leap options in this. I'm looking possibly out to the 2025 leap options. So let me switch over here again back to Yahoo. Stop this screen and we'll switch to Yahoo. Over here. So the Pro Shares Ultra Pro S&P 500, just going to cover this one again real quick. 0.91% expense ratio, 19.21% year-to-date total return. So that's already matched like what the S&P could return in a full year because of that triple leverage. Now at this maximum point of this fund, the fund got all the way up to 76.28, and the fund has split several times. But I tell you what, if you had got into leap options here, like at the start of the pandemic, and you held it here, you would have made a fortune in these. It hasn't been that good since, but even if you held you look at 2017, 2018, 2019, we saw some pretty steady growth, but nothing like we had during the pandemic. So if we look at options, I think the furthest they go out, and I would probably do this because the further out you go, the more time you buy yourself. So I would look at probably January 2025. And I'd probably look at, this is strange. $45 is almost as cheap as 50. But I'd probably look at like 45, or see, the prices are different because some of them are less volatile or less traded than others. But if I do this again, I'd probably load up on contracts for like the January 2025 options. These would be truly leap options because this is almost 2 years out. So let's see. What's the cheapest one on here? $60. $60 could be kind of a stretch. I'd probably stick to 45, or I'd even go maybe 46. Or, well, there's not a lot of difference between 47 and 48, but you see 49 is cheaper, actually. If you go to 55, you're at 479. So probably any of these within this range is what I would consider going to. And like I said, in a future video, I'll do like the Thinkorswim. I'll pull up Thinkorswim by TD Ameritrade, and I'll illustrate exactly how well these could have done, because you can actually back test options trades, and you can see, how well, if you had bought, say, 10 contracts of something here and held it for like a year or for 6 months, and the S&P did this, and the UPRO's doing this, like I said, because it's the triple levered, so it's doing this while the S&P is doing this, right? So when that happens, you can really make a fortune, and you can have fun on TD Ameritrade back testing. Because remember, triple leverage in the S&P, and you're getting like 10 contracts, which options already are like 10xing what the stock's going to do. just because they control so many shares. They control one option contract controls 100 shares of a given stock. So you're talking like a 30x. So you're talking like if you're just holding the S&P index fund, you're doing this. But if you're holding the UPRO, you're doing like, infinitely, you're going to see some big separation quick. So with that being said, got about 10 minutes in here. No audience engagement today, but I'll try to find some more interesting funds because this one didn't garner too much excitement today. But anyway, hope you all like that, especially those of you that catch this on the back end. If you don't mind, I appreciate it if you comment, and subscribe, and take care. Keep an eye out for. We should have the podcast tomorrow. We might have another guest, another cool guest tomorrow. So keep an eye out for that. Thanks so much. Take care.